Snowball derivatives are crashing the market. Here is a screenshot of a snowball derivative loss. And let me translate it to you. Your participation on the January 13, 2022, the survival period of the 500 index snowball is 24 months. Today, January 15, 2024, is the expiration date of the product. The starting price is 7,097.76 for an index. Today, the closing price of the China Securities 500 index is 5,193.3. Because the margin rate of the contract is 25% and the closing price is lower than the initial price, more than 25%, a decrease of negative 26.83%. You have no 2 million principal and coupons invested this time. Please note the settlement notice will be sent after it is received. So this person lost 2 million. All right, 2 million gone because the more than 25% of the snowball securities derivative was triggered. Now, what the hell is this? And it is absolutely crashing the market here in China. And you guys probably do not know about this because this does not exist outside of China. Snowballs are derivatives in which investors receive a bond-like coupon if the underlying asset, such as the CSI 500 and CSI 1000 indexes, do not hit a predetermined knock-in level, which were popular among investors until recently, when such knock-ins started happening more often as indexes fell. And this was 23rd of January 2024, just weeks ago, 1 week ago. China snowball and their role in the year's stock sell-off, 23rd of January 2024. China retail investors hit by big losses in snowball. Lots of snowball stuff. China snowball knock-ins fuel futures sell-off. China snowball's higher return means higher risk. Are we making a mountain out of a snowball? This is all like just recent, 2 days ago, etc. So what the hell are these snowballs? Here, Financial Times breaks it down perfectly. Chinese retail investors hit big by losses in snowball derivatives. Chinese retail investors who loaded up on a derivative that rely on calm market conditions have been hit with heavy losses, further undermining confidence in the country's sputtering equity market. So-called snowballs, which promise a stream of sizable interest payments as long as the stock indices trade within a certain range, have grown to an estimated RMB 320 billion, $45 billion US market in China. Brokerages and private wealth managers increase sales of such derivatives, named because of the steady returns that they can accumulate for holders. In 2021, touting the higher yields on offer at a time when equity markets were relatively placid. But a protracted stock rout since late 2023 has led to indices breaching a lower limit embedded in the contracts, triggering so-called knock-ins that leave many holders facing substantial losses on their original investment unless stocks rebound. Most of the estimated RMB 327.5 billion of outstanding snowballs are tied to the CSI 500 index of Shanghai and Shenzhen listed stocks and its small cap counterpart, the CSI 1000, according to Zhao Wei and analyst Sinolink Securities. Zhao said there had been a wave of snowballs knocked in when some Chinese stocks sank to a 5-year low this week. Markets have since been steadied by Chinese Premier Li Qiang's promise of forceful state support to halt the sell-off. Retail investors are now left nursing big losses on investments they say were marketed as relatively safe alternatives to bank deposits. The sales team will start marketing by asking this to their clients. Do you believe the CSI 500 could fall by more than 20%? If not, you should buy a snowball as a safe bet, said the head of a medium-sized Chinese brokerage that sells snowballs. Stephanie and Leo, a 34-year-old clerk working in Shanghai, clubbed together with friends to buy RMB 1 million worth of snowballs in June 2022. The contracts offered a 15% yield over 2 years as long as the CSI 500 did not fall more than 20% or rise more than 3%. Now her contract is on the verge of a knock-in threshold that would trigger a 20% loss on her original capital unless there is significant market rebound by June. I feel helpless and guilty because of my friends, she said. It is a situation that has no solution. It's not the right question to ask why we bought snowballs, but why the index is performing like this. Despite their small size relative to Chinese equity market as a whole, analysts said the wipeout for some snowball holders could exacerbate the country's stock rout. Brokerages that sell the contracts typically buy stock futures to hedge their position. When knock-ins are triggered, they have to sell those hedges. In a downturn market, futures trading in link with the snowball positions could intensify the selling pressure on Chinese stocks, said Yu Mingming, an analyst at brokerage Cinda Securities. The Chinese Securities Regulator Commission urged brokers in 2021 to strengthen their risk controls on snowballs and refrain from marketing them as fixed income products. Still, the sector remains relatively loosely regulated. The SRC did not immediately reply to a request to comment. Complex derivatives and products such as snowballs have backfired for Asian investors before. In 2009, several major banks lost heavily after Korean courts extradited hundreds of companies from contracts that would prove ruinous if the yuan moved outside said targets. Okay, so just to clarify what it is, basically, it's sort of like selling a put contract. And to be very clear, you have to be like a very high net worth individual. So the money tied up in these are massive. So it's within a fixed period of time, and all you see, like, the stocks have already increased by more than 25%, decreased more than 25%. But basically within a 2-year time frame, say from 2022 to 2024, if the stocks just chug along, you earn like a 6%-ish stable income. And you can leverage that up by up to 4x. And that gives you like 20+% annual return of investment. So that's pretty good, pretty decent, as long as the stock price doesn't drop below 25%. And if it drops below 25%, then you trigger the knock-in, and essentially you're forced to liquidate. And if you have 4 times leverage, you lose 100% of your money. So it really is a good investment if it was in like a choppy area and not like this downwards diving. So this really is just not that good. And you saw with that screenshot, this person lost 2 million. All right, because of 25% decrease, they lost 2 million in their principal and coupons. It is unclear if this person was leveraged and then only lost 25%, and that was 2 million, or if they were leveraged and then because of the drop of 25%, they lost 2 million, and that was everything. But this is no joke, guys. This is absolutely no joke. This is gonna exasperate selling if this continues going down, obviously. Now, quick look at NIO stock, okay? So in the morning, in my previous video, I did talk about how we could potentially break above 8.3, and we want to see NIO stock break above this line. This is the on the brink line, right? When I talked about holding a thin line, this was the line that we wanted to break above. We just got rejected down here. Not looking too pretty, to be honest. We cannot hold our heads above 5.83. And now just lots of selling going back down to as low as 5.54, now at 5.68. So overall, this, we really want NIO to break above that, man. We really want NIO to break above that. But unless we can do that, it looks like the trend is still heading lower. And to be honest, all right, it looks like we could possibly hit this level, which is a gap from many years ago. And I don't want it to happen, okay? And if it does happen, get your wallets ready, and you're gonna buy a lot. I'm gonna buy a lot. But this is a gap from way back. Let's see, where is this? Yeah, right here. June of 2020. This is when we had this big gap up from $4, $4.72, all the way up to $5. So this gap looks like it's gonna get filled, and we might come back down here, tap it. We don't know for sure. Nothing's for sure, and I'm calling this the basement floor because I do not expect NIO to get any lower than that. And if we do, then that just means that something really nasty happened. But yeah, it looks like, for China, man, I really hope that this is the bottom for China right now. But the snowball thing is no joke, guys. No joke. A lot of people are invested in this. And yeah, imagine losing all your money because of a 25% decrease. You were promised stable income. Yeah, it sucks. But yeah, it is what it is. Once these people get liquidated, I mean, like here in China, so many content creators are talking about the snowball getting out of control. And I did not know what they were until I did more further research into it. So this is something to know about. Snowballs, man. Snowballs crashing the Chinese stock market. Pretty crazy to think about. Why do they even call it snowballs, man? Couldn't they call it something else? But yeah, that's such a weird name. But as always, stay safe, stay healthy. Peace out. Hopefully NIO gets up there.